Hello and welcome to our video on avoiding common investment mistakes. In this video, we'll discuss some of the most common investment mistakes and the lessons we can learn from them. Investing can be a great way to build wealth and achieve your financial goals, but it's important to avoid common mistakes that can cost you money in the long run. So, let's get started with the first mistake. Mistake number 1, not having a plan. One of the biggest mistakes investors make is not having a plan. Before you start investing, it's important to have a clear idea of your financial goals, your risk tolerance, and your time horizon. Without a plan, you may make emotional decisions based on short-term market trends, which can lead to poor investment decisions. So, take the time to develop a personalized investment plan that aligns with your goals and risk tolerance. This can help you make more informed investment decisions and avoid making emotional decisions based on short-term market trends. Mistake number 2, trying to time the market. Another common mistake is trying to time the market. This means trying to buy and sell investments based on predictions about market trends. Timing the market is extremely difficult, even for experienced investors. Trying to time the market can lead to missed opportunities and higher trading fees. Lesson: invest for the long term. To avoid this mistake, invest for the long term. Focus on your investment plan and stick to it. Avoid making emotional decisions based on short-term market trends. Mistake number 3, not diversifying your investments. A third mistake is not diversifying your investments. This means investing all of your money in a single stock or asset class. Not diversifying your investments can increase your overall risk. If one investment performs poorly, your entire portfolio may suffer. Lesson: diversify your investments. To avoid this mistake, diversify your investments. Invest in a variety of assets, such as stocks, bonds, and real estate, to reduce your overall risk. You can diversify your investments by allocating your money across different asset classes and within each class, by investing in different companies or funds. Mistake number 4, chasing hot investments. Another mistake is chasing hot investments. This means investing in a stock or asset that has recently performed well. Chasing hot investments can be tempting, but it can lead to poor investment decisions. By the time you invest, the asset may have already reached its peak, and you may end up buying at a high price. Lesson: focus on fundamentals. To avoid this mistake, focus on fundamentals. Look for investments with strong financials, a solid business model, and a competitive advantage. This can help you make more informed investment decisions and avoid chasing hot investments. Mistake number 5, ignoring fees and expenses. The final mistake is ignoring fees and expenses. Investment fees and expenses can eat into your returns, so it's important to choose low-cost investments. Lesson: keep your costs low. To avoid this mistake, keep your costs low. Look for investments with low expense ratios, such as index funds and exchange-traded funds, ETFs, which can provide exposure to a broad range of stocks or bonds at a low cost. And that's it for our video on avoiding common investment mistakes. Remember, by starting with a plan, investing for the long term, diversifying your investments, focusing on fundamentals, and keeping your costs low, you can increase your chances of achieving your financial goals.